This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. U.S. energy firms this week cut the number of oil rigs by the most since September as production grows incrementally because energy firms are boosting shareholder returns and facing higher operating costs due to inflationary and supply chain pressures. The number of oil rigs, an early indicator of future output, fell 7 to 598 in the week to August 5, the first weekly decline in 10 weeks, energy services firm Baker Hughes County said in its closely followed report on Friday. Gas rigs rose 4 to 161, their highest since August 2019, while the combined oil and gas fell by 3 to 764, which puts the total rig count up 273, or 56%, over this time last year, Baker Hughes said.
Oil prices settled higher on Friday, recouping some of this week's losses on strong U.S. job growth data, but closed the week at their lowest levels since February, rattled by worries a recession could hit fuel demand. Brent crude settled up 80 cents to $94.92 a barrel, 11% off last Friday's settlement. U.S. West Texas Intermediate crude settled up 47 cents to $89.01, off 8% in the week. U.S. job growth unexpectedly accelerated in July as non-farm payrolls increased by 528,000 jobs, the largest gain since February, the U.S. Labor Department reported.
Moving on to the top news in the energy sector.
Russia has banned investors from so-called unfriendly countries from selling shares in key energy projects and banks until the end of the year, stepping up pressure in the sanctions standoff with the West. Western countries and allies, including Japan, have piled financial restrictions on Russia since it sent troops into Ukraine in late February. Moscow retaliated with obstacles for Western businesses and their allies leaving Russia, and in some cases seized their assets. The decree, signed by President Vladimir Putin and published on Friday, immediately bans investors from countries which supported sanctions on Russia from selling their assets in production sharing agreements, PSA, banks, strategic entities, companies producing energy equipment, as well as in other projects, from oil and gas production to coal and nickel.
Russian diesel exports hit their highest in July since March as Moscow continued to find outlets for its fuel despite sanctions by Western nations. Western countries and allies, including Japan, piled sanctions on Russia after it invaded Ukraine in late February, in what Moscow calls a special military operation. The European Union in May agreed to cut 90% of its oil imports from Russia by the end of this year. But many companies have already pledged to stop buying Russian fuel and begun seeking alternatives. And the United States banned Russian oil imports in March.
Next, we have the top news in metal markets.
Iron ore futures rose on Friday, with Singapore's benchmark contract rebounding after a 5-session sell-off, as a recovery in steel margins in China eased concerns over weak demand for the steelmaking ingredient. Iron ore, however, was set for weekly losses amid worries about China's ailing property sector, COVID-19 curbs, steel production cuts, and Sino-US tensions over Taiwan. Iron ore's front-month September contract on the Singapore exchange was up 3.6% at $109.55 a ton, as of 0700 GMT, after touching its weakest since July 25 at $104.70 on Thursday.
Copper continued to rebound on Friday as fears of a global recession eased after strong U.S. jobs data and investors focused on low inventories and threats to supply. 3-month copper on the London Metal Exchange, LME, climbed 1.8% to $7,869 a ton by 1610 GMT, building on the previous session's 0.7% gain. U.S. COMEX futures rose 1.9% to $3.55 a lb. Copper has recovered from 3 days of losses early this week prompted by weak global factory data and flaring U.S.-China tensions after U.S. House of Representatives Speaker Nancy Pelosi's visit to Taiwan. We will now look at the top news in the agricultural sector. Russia will downgrade its forecast for grain exports in the 2022-23 July to June season from the current 50 million tons if its harvest fails to reach the target of 130 million tons, the Agriculture Ministry said on Friday. The pace of crop harvesting in Russia, the world's largest wheat exporter, is currently slower than the ministry expected due to a cold spring leading to a late start, as well as rain and a lack of spare parts for foreign agricultural equipment, it said. Taken together, all of this creates risks in terms of reaching the grain harvest figure of 130 million tons, Agriculture Minister Dmitry Patrushev said in a statement, referring to a target announced in May by President Vladimir Putin.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.